Welcome to Jazara for Dummies. It is June 4, 2025. Let's look at today's news from Professor William Liebenberg, prepared by Martin Stein. Please like, share and subscribe. Join our Telegram group in the comments below. Thank you. Let's go. Payment systems. The reality is surfacing. XRP is no longer a speculative digital asset, it is now 1. The centerpiece of a rapidly unifying global financial infrastructure. 2. Positioned to power everything from cross-border payments and institutional treasury, to real-world asset tokenization and decentralized liquidity. Here's a high-level overview of what's happening. Once Ripple has launched its enterprise-grade stablecoin RLUSD, which is now live on both XRPL and Ethereum, via burn-to-mint bridging. At the highest level, XRP is positioning itself as the liquidity backbone for a multipolar financial future, one where tokenized assets, kosher, CBDCs, central bank digital currency, and permissioned stablecoins flow seamlessly across interoperable systems. XRP sits at the center of this unified ledger model. Programmable, settlement final, regulatory aligned, and institutionally deployed. The transformation is live, scaling, and accelerating. Happy 13th birthday to the XRP ledger. 13 years of uptime. 13 years of impact. You better get ready. The ISO 20022 milestones, and future crucial dates. March 2023, SWIFT began the phased migration to ISO 20022 for cross-border payments, allowing coexistence with message-type messages until November 2025. November 2023, the European Central Bank, and other major financial institutions in the Eurozone, completed their migration to ISO 20022 for Target 2. July 14, 2025, U.S. domestic payments using FedNow and FedWire are transitioning to ISO 20022. July 22, 2025, U.S. Cryptocurrencies Regulations cutoff date, and then President Trump will sign the ISO 20022 cryptocurrency-compliant coins into law, so that legal crypto trading can start. July to November 2025, the phase-out of non-compliant ISO 20022 cryptocurrencies start, and the activation of ISO 20022 compliant cryptocurrencies start, especially stablecoins. November 2025, the crucial date for ISO 20022 adoption, is the cutoff date November 2025, as this is when cross-border payments and reporting must already be transitioned from using SWIFT message-type messages, to exclusively using ISO 20022 messages. This is the end of the coexistence period, when SWIFT will no longer process message-type messages for cross-border payments. In other words, the funeral date for SWIFT and non-compliant banks, RIP. Meaning all cross-border payment systems must come online, shortly after July 22, to convert to the new system. The 17th BRICS Summit, hosted by Brazil, will be held in Rio de Janeiro on July 6 to 7, 2025, where crucial decisions will be made to when exactly their cross-border payment system will come online for Operation Sandman. Ripple XRP plays a foundational role in this BRICS system. November 2026, SWIFT stops supporting unstructured addresses at this point. It will now be non-existing. November 2027, all financial institutions must send and receive exceptions and investigations messages. Accurate and timely updates is our core business at Jazara for Dummies. Integrity defined, the quality of being honest, and having strong moral principles that you refuse to change. Biblical origin, let your yes be yes, and no, no, period. We as the Jazara for Dummies team, will at all costs stay on this foundational principle, and stay the course. No fake guru sensational hype, and no fake or empty promises. Our yes remains solidly yes, and we will continue to strive to give you timely accurate updates, as much as we humanly can. Genius Act heads to U.S. Senate floor. America is now racing to regulate stable coins. The Senate returned to work on Monday, and the focus will be behind the scenes, where lawmakers are working to advance the bipartisan Genius Act, stablecoin legislation, that grand old party leaders are hoping will pass the Senate this week. It is the bill that could advance and reshape the entire financial system. Here's the kicker, Ripple's RLUSD is coming, and it's built for compliance, transparency, and total integration with XRP. They mocked stablecoins, now they're writing emergency legislation to control them. If you think RLUSD is just another stablecoin, you're completely missing the bigger play. 1. It's Ripple's entry into programmable money. 2. It activates institutional liquidity, via XRP rails. 3. And it positions Ripple for CBDC-adjacent dominance. Everything is aligning. The laws, the tech, the liquidity. They don't want you holding XRP when the grid flips, but it's already happening. Ripple's RLUSD stablecoin has been officially approved by the Dubai Financial Services Authority as a recognized crypto token for use in the Dubai International Financial Center, DIFC. This isn't just regulatory clarity, it's geopolitical validation. Dubai has opened its gates. RLUSD is now illegally plugged into one of the world's fastest-growing financial hubs. The Ripple liquidity machine is going global, and it's starting in the sandbox of the elite. While others fight lawsuits, Ripple is building the new monetary system with central banks, sovereign partners, and compliant liquidity rails. RLUSD is the key. XRP is the engine. And Dubai just gave it the green light. The U.S. Securities and Exchange Commission, SEC, has begun examining a new proposal for a spot XRP exchange-traded fund, ETF. The application was submitted by asset manager Wisdom Tree. If approved, this would be the first spot XRP ETF in the country. The product is designed to allow investors to gain exposure to XRP without directly owning the digital asset. Jerome Powell just said, "The end of the Bretton Woods era fundamentally changed monetary policy." Read that again, as the Federal Reserve is saying the quiet part out loud. Let's watch.
Had emerged from World War II as a global economic superpower. The Bretton Woods Agreement placed the U.S. and the Fed in a central position in the global economy. Our mission then, as it is now, was to serve the American people. But it was clear at that moment that the Fed needed to have better knowledge of global developments to achieve our dual mandate goals. A 1948 memo proposing to create the division stated, quoting, "Problems of international economics and finance have become increasingly large, complex, and significant in recent years, and our foreign economic relations will undoubtedly continue to give rise to issues of the first magnitude." That rare economic forecast that has turned out to be spot on. 75 years later, it remains critical that the Fed understand the policies and practices of other governments and central banks and their implications for the U.S. economy and for financial markets. Exchange rate policy, of course, is now firmly in the hands of the U.S. Treasury. However, the end of the Bretton Woods era in the 1970s fundamentally changed the conduct of monetary policy, as policymakers had to understand the effects of potentially more volatile movements of the U.S. dollar on American families and businesses. Understanding global trade and capital movements has only grown in importance since 1950, as we saw during the pandemic.
The old monetary system is dead. The next one? Tokenized, decentralized, real-time. And XRP is perfectly positioned as the liquidity backbone of this new era. They've been preparing behind closed doors, now they're preparing you. The reset is real. XRP is the bridge. Why did Jerome Powell bring Bretton Woods up now? Because the old Bretton Woods Agreement fixed the US dollar at $35 per ounce of gold, making the dollar the world's dominant reserve currency, but the new Bretton Woods III will not fix it. So on this 13th Keystone anniversary of XRPL's June 2, 2012 birth, an astounding Federal Reserve Chairman's confirmation followed. The 1944 Bretton Woods is officially dead, past tense, done. First Basel III, then Bretton Woods Agreement III. These two force a gold standard. The return to the gold-backed, Tier 1 asset, currencies, are in preparation in various countries. Globally, countries are stacking tons of gold. Forbes, the signs are there, the gold standard is coming back. The global economic system under which most countries have operated, for the last 80 years, is being reset, ushering the world into a new era. The stablecoin revolution is here. RLUSD plus XRP bridge equals the future of finance. The Genius Act is a game changer. How many cryptocurrencies regulations will be needed, and in which areas? His cryptocurrency regulations will cover 3 areas. On January 23, 2025, President Trump signed an executive order that sets forth the administration's policy to support the responsible growth and use of digital assets, blockchain technology, and related technologies across all sectors of the economy. The executive order focuses on several key priorities, including 1. Establishing the President's Working Group on Digital Asset Markets, the working group, within the National Economic Council, completed. 2. Restricting agencies from engaging in actions to establish, issue or promote central bank digital currencies, CBDC, completed. 3. Promoting the growth of U.S. dollar-backed stablecoins, RLUSD, awaiting Senate approval. 4. Protecting and promoting crypto companies' access to banking services, still outstanding. 5. Providing regulatory clarity and certainty for the crypto industry, still outstanding. The executive order directs the working group to submit a report to President Trump, within 180 days, that proposes a comprehensive federal regulatory framework for digital assets, including stable coins, and that evaluates the potential for a national stockpile of digital assets. In other words, the Trump administration appears to be moving swiftly to remove perceived obstacles to the widespread use of blockchain technology and development of the crypto asset markets. By assessing the merits of relevant regulation, guidance and policy that impact the crypto industry, the working group will act to further the President's agenda of generating actionable ideas to provide increased regulatory certainty and concrete guidance to market participants regarding the rules of the road. In the newly created role of Crypto and AI czar, South African-born David Sachs advises the President and guides the administration's policy on matters related to crypto. The executive order covers the clear expectations for how banks may engage in crypto-related activities. The executive order specifically names fair and open access to banking services for the crypto industry a key priority. We expect that Trump administration banking regulators will provide a clearer framework for banks to engage in crypto-related activities, such as providing custodial services, and to partner with crypto companies to facilitate providing crypto products and services. Many companies will still need to navigate the complex web of state regulation that applies to crypto and other digital assets. Regulated entities will need to satisfy their usual compliance obligations, including by implementing and maintaining appropriate policies and procedures, training, and other controls. The good news: President Trump's deadline of 180 is fast approaching. July 22, the full report, including all areas, must be on his table. The need to get all laws and regulations, amount and types are unknown, into place is a matter of top priority for President Trump. Once the Cryptocurrencies Regulations are in place, all guns will be blazing. All cross-border payment systems will come online, Trump's tariffs trading will shape, reset, revalue currencies, countries will connect their currencies to commodities, tokenization will skyrocket, stablecoins will dominate, and the global currency reset will pave the way for the coming gold standard. The end. But wait, there is more. Let's watch these 3 short videos. 1. Understand the XRP system.
One of the most common questions I get asked is, if XRP, HBAR, or Algo are for real-world payments, why would institutions use them if the token gets expensive? Let's break it down, because this is where most people are stuck thinking like retail, while institutions are playing a different game. First of all, banks don't buy crypto like we do. They're not jumping on Coinbase and trying to time the bottom. They move value, billions at a time, using treasury capital, central bank reserves, and enterprise liquidity providers. They're not looking for cheap, they're looking for performance. Second, they're already wasting $200 to $250 billion a year on outdated systems. SWIFT fees, pre-funded accounts, fraud, compliance overhead, manual reconciliation, FX delays. If blockchain tech can eliminate even half of that, they'll use it, regardless of the price per token. Now here's a light bulb moment. Most people miss it. It's not about how much the token costs. It's about how much it can move. If XRP is $1, you need 10 million tokens to settle 10 million. If it costs $100, you only need 100,000 tokens. The fewer the tokens, the less the friction, the less sourcing, the less risk, A higher price actually makes the system more efficient. It's not hype, it's just math. And no, institutions aren't scared of a $100 token. They're scared of something else. They're scared of friction from outdated rails, legacy bottlenecks, and too many middlemen. They're scared of failure, wires getting lost, flagged, reversed, or solved for days. They're scared of delays because when the money is stuck, they lose liquidity access and risk exposure. What causes that? Swift waiting periods, currency conversations, compliance bottlenecks, mismatched data, pre-funded accounts, and all a bunch of third parties taking their cuts. Let me help make it click. XRP is the pipe, not the water. If you need to move 10 million and XRP is only worth $1, you're jamming 10 million tokens through a narrow pipe. That creates pressure, slippage, and inefficiency. But if XRP is worth $100, that pipe gets wider. You only need 100,000 tokens. The flow is smoother, faster, and more controlled. The system works better because the pipe fits the pressure. That's why XRP has to be expensive, not to moon, but to function as the backbone of a global financial system. So when people say, why would a bank use a token that's expensive? Here's the answer. Because expensive tokens do the heavy lifting and the old system can't carry the weight anymore.
2. When the payout occurs, make sure you find a kosher private bank.
Where do rich people actually keep their money?
Not in your average bank.
Why not?
Because normal banks are made for saving, private banks are made for growing and protecting your wealth.
What's the difference?
At a private bank, you don't get a debit card. You get a private manager, you get a legal team, and you have access to some deal that you cannot find online.
What's the minimum to get in?
It depends. Usually average is 1 million. It could be 100,000 in Mauritius, it could be 25 million in Switzerland.
Where do they open these accounts?
Traditionally, country like Luxembourg, Switzerland, Liechtenstein, or even Singapore, Mauritius, UAE, and even some Caribbean bank. Why not?
Why not just use JP Morgan or Revolut?
Because when you're rich, you don't want an hub, you want safety, you want control, you want protection.
Can normal people do this?
Of course, with the right setup, yes, why not? Follow me and I will
3. Israel will be left for last, and this will force the gold price into the required price for the RV.
So Israel is planning a major attack on the Iranian nuclear facilities. It's on the cards. There is already talk, rumors and noise. Trump is very highly likely to green light this attack. Trump will not allow US Air Force planes to attack the Iranian nuclear facilities. However, he will use Israel and Israel will attack. When's that going to happen? Maybe the next 4 to 6 weeks, 8 weeks, not really sure, but watch oil and watch gold. Gold will go to around about $3,700, $3,800 an ounce as a result of that particular strike. It is going to happen. Very clear, it is going to happen. Markets will fall off post-attack for a few days and then rise again, but there could be a retaliatory attack by Iran on shipping and obviously on Israel if that was to occur. All of this we discuss on the mentorship, where the members get up-to-date information on a day-by-day basis. If you want to join the Gold group, DM Gold.
That sums up your Wednesday news. Thank you for watching. See you tomorrow.